Hello guys, welcome to the next episode. Today we're going to be talking about mortgages. I'm specialized in real estate and sorry if I don't have the suit, but it's kind of middle of the summer and I don't really want to sweat that much, and also because I didn't want to stretch it because I'm getting a little bigger. So let's just jump right into it. I wanted to show you my formula for calculating the mortgage, and then I'm going to give you a couple of examples based on the interest rate. Now, the interest rate vary depending on the country you're in. For example, I'm actually in Czech Republic, Prague right now, and banks usually offer an interest rate that depends on how many years the rate is going to be fixed and in how many years you're going to repay. Usually you just look at 30 years repayment, so you will take 30 years mortgage and you will pay it back in 30 years. But sometimes it's not fixed for the same period of time, that is variable, and you always want to ensure that you have the longest period of fixed rate, because whenever it's too short, the interest rates are just going to be volatile and they will just spike up. They say also down, but they will never go down. They will continue to spike up and they will really increase your monthly payments a lot. So you want to keep it for enough, but you don't want also 20 years, 25 years, because at that point you don't even know if you're gonna keep it for that long. So it's pointless to just increase your interest rate so much, while you could have just had half a percentage of interest rate lower if you were keeping it for those 5 or 10 years less. The best option is to have a 10-year, 15-year fixed interest rate. If you want it higher because you want to keep it for a lifetime, you can do so, but there is no point if you're looking to invest and then maybe in the future you're going to sell it or refinance it or do something similar. So just find a good balance. How could you find a good balance? And that is exactly why I'm making this video, to be sure that even before you speak with a mortgage broker, you are prepared on how much is the actual amount that you will be receiving, that you have to pay on a monthly basis, so that you can calculate before speaking to them, to show them that you're a little bit more professional, and so that if you're looking for a property as well, you can start running some real numbers and some real calculations based on the actual numbers that you're going to be paying for the property. So for example, this is our formula that I use in order to find the coefficient, the monthly mortgage payment. We're going to need one number that is a mortgage coefficient that you will multiply with the total amount of your loan, and this will give you how much exactly is your monthly payment. So how do we calculate the mortgage coefficient? We calculate this by taking the monthly coefficient, my monthly interest rate. Now remember, interest rates that a bank will provide you are usually on a yearly basis, right? So you want to calculate how much that is in a monthly rate. So simply you take the monthly interest rate as a real number, which is 0.0264, and then divide it by 12. And that is going to give me 0.0022. And that is my monthly coefficient. So monthly coefficient is on top of the equation, and we need to divide the monthly coefficient by this, which is 1 minus, and then we have in parentheses 1 divided by 1 plus the monthly coefficient, that is the number we just found up here, elevated by the number of payments, which usually is 360, because if you want 30 years, you have 30 per 12, it's 360, and it's 360 payment you're doing. You pay every month, so it's 360 payments. And this is the formula to find the mortgage coefficient. And with this number, then you will be able to understand how much is your monthly payment. So let's go inside the math, let's go in depth. I will show you two of the examples, two of the calculations I made, and then I'm gonna make another calculation with you guys. So let's see, fixed for 15 years. This is a 30 years mortgage, one example of the property. I spoke to the bank the last week and I said, how much can you give me of interest rate? if I take 30 years, it was already on the website, you can find this information on the website, but you can also call them and they will tell you. If I were to take a mortgage for 30 years, to pay back for 30 years, and I wanted it fixed for 15 years, meaning my interest rate will not change for the next 15 years, for the first 15 years, how much would my interest be in those 15 years? And they said 2.64. So I take 2.64, remember what we had to do? We calculate the monthly coefficient first. So we take 0.0264 and we divide it by 12. We found the monthly coefficient, which is 0.022. Now we have to add this. We start from the bottom of the fraction of this equation. We have to do 1 plus monthly coefficient. So we take 1 plus 0.0022 and we find 1.0022. And we have to elevate this number by the number of payments that we have, which is 360. So 1.0022 elevated by 360, you can do it with the calculator. You simply find out the number. It's 2.2058878 Now with this number, we are still under the fraction, so there is still 1 divided by this number, and we're going to find 0.45333.206. Now remember, we have to, we solved the equation inside the parentheses. Now we need to take 1 and subtract the number that we just found. So 1 minus this 0.45333.206 is 0.546667794. Now the last thing we need to do, we need to take the monthly coefficient, which was 0.0022, and we divide it by the number that we just found, which is 0.546667794. My result is my mortgage coefficient, and the number that the result is this one, right? 0.00402438.2. What does this mean? This means that whenever now I want to calculate how much my monthly payment will be with a 30-year mortgage and 15 years interest rate at 2.64%, I simply take the total number of my loan and I multiply it by this number, and it will give me exactly how much. Now, if I make an example, I take my computer and let's say that my property is 3 million crowns, because here we use crowns. 3 million crowns, we multiply by 0.00402438.2, and it gives me 12,000 crowns. If what you can ask for this property is higher than this number, then you're making a profit every month, right? If I know that I'm purchasing, I can keep using this coefficient for any property, because it doesn't matter, right? I can use it for any property. I can change the number all the time, but the coefficient remains the same. That's why it's a coefficient. So I search a property that is close to the center and its price is 3 million. I simply put it in the calculator and it tells me, puff, this is the number that you have to pay the bank every month. And then I say, well, this location, it's good. I know that I can rent it to one person for 15,000. I can rent it for two people for 17,000. So, well, I'm making minimum 3,000 crowns a month. So it's good. It's a good investment or not. Then you decide, right? Math is very important because of that. Let's make another example. Now I want to know how much is my fixed, if my fixed interest rate was 10 years, how much would I have to pay on a monthly basis to the bank? And this is how we do it. I asked the bank and they said that your interest rate would be 2.44%, right? Here it is, fixed 10, 2.44%. Now, we take the 2.44%, look at the formula. We have mortgage coefficient is equal to monthly coefficient divided by 1 minus, parenthesis, 1 divided by 1 plus monthly coefficient elevated by the number of payment. So first, we solve the equation starting from the bottom. which is 1 plus monthly coefficient elevated by the number of payments. We already know the number of payments is 360, so we just have to do 1 plus monthly coefficient and elevated by 360. So again, we take this number, we divide it by, we make it an integer number, and we divide it by 12. So 0.0244 divided by 12, and we find 0.0020333. Now, we remember have to add 1. It's 1 plus monthly coefficient. So 1 plus this number, and then we elevate this to 360, which will be 2.0776901,987. Now we subtract this number from 1. So 1 minus this number is 0.5186962904, and we simply take monthly coefficient and we divide it again by this number. So my monthly coefficient was 0.0020333. We take that number and we divide it by our result. Our monthly coefficient, our mortgage coefficient, sorry, is 0.0039208. So we want to know how much the rent is. We take this, we type into the calculator, and we multiply that by the loan amount. And it will say how much I have to pay the bank every month. Now, let's do it again, but this time I will show you the passage, like step by step, so maybe you can understand better how to make the calculations. So, we have fixed 8 years. So, mortgage 30 years, fixed by only 8 years. How much is my interest rate, bank? They say it's 2.34. So, once again, I take my calculator, and it says 2.34%, right? Now, looking again at our formula, the mortgage coefficient is monthly coefficient divided by 1 minus, parenthesis, 1 divided by 1 plus monthly coefficient elevated by number of payments. So we start from the bottom, 1 plus my monthly coefficient, which is 0.0234 divided by 12, which I already done this, so 0.0234, which is my interest rate, right? We divide that by 12 and we find 0.00195, right? So this is my monthly coefficient that we put here and we put on top here, right? So 0.00195. Now remember, we need to add 1 to this number according to the equation. So it's 1 plus this number, and we elevate to 360. So we do plus 1 equals, there you go. And now we elevate with that one, we elevate to 360. My result is this one. Now, we abbreviate it, of course. We're not going to write all of that down, but it's going to be, wait, on the other side, it's going to be 1 divided by this number, sorry, 1 divided by 2.01640,543,4728. Now, the more ahead you go here, the more precise the number will be. If you're in the calculator, you can copy paste this. So you select it and you do Ctrl+C, you copy it, so you're sure that you can use it properly. And then you do 1 divided by, and you paste. Enter, and it gives me 0.49 blah blah blah. I will do the same again. So we found the number inside of the parentheses, and now we have to do simply, remember that I put 1 minus because outside of the equation we need to take 1 and we need to subtract this number. So it's 1 minus, and our result, which is 0.49 495,932 009 8910, etc., etc. Now I don't want to stay there and copy it all, but I want to be precise, so I copy all of it as long as I can go. I copy, I delete, and now I need to do 1 minus this result, this number, and it's going to give me this number right here, 0.50406799 010, etc., etc. I do the same. I copy and paste this result as well. Now what do we need to do? The last thing, take the monthly coefficient and we divide it by this number that we just found. So my monthly coefficient, again, it's right here, and it's 0.00195, and then we divide this number by our number that we just found right here, and it's gonna give us, if you can see, 0.003868 5257 52575. That's it. Now how can we use this? Like, how can we use this number, this coefficient that I just showed you? Well, you just go online and you find a property that you may like. Let's say, oh, look at this one. Oh, okay, nice. It has a nice kitchen. It has, well, it's very new, it's renovated, a nice bathroom, nice kitchen, blah, blah, blah. And it says here it's 2,950,000 crowns, right? And it says, well, it's almost in the center. Now, I've lived in many locations around this map, so I know how much the icon asks depending on the location, and that's why you should start investing in real estate in your own area, because you know the area, you know the location, and so you know how much the rents are. You can make much better calculations because you're not trusting other people, or you basically know the market, you know the rents, and you know what you're doing, right? So for example, I know this is 2,950,000 crowns. Now, obviously, when you go and get a mortgage, you don't get a mortgage for the whole amount. Usually it's 20% down payment and they give you 80% loan to value. It depends on your area, it depends on your banks. In Czech Republic, they usually give you between 80 and 90%. My bank gives me 90% loan to value, meaning they will give me 90% of the total value of the home, 90% of these 3 million crowns, they will give it to me, okay? And I will simply put down in cash the rest. So that means that out of 2,950,000, I simply have to take this number and take away 10%. It's going to be approximately 2,650,000, let's say. Let's be approximative. It's a little less, but who cares? So I take this number and I multiply it by 2,650,000 crowns, right? So it's the number I just found, which is still saved here, the 0038, and we multiply this 2,650,000 crowns, and it's going to give me, your monthly payment is 10,251 crowns. So what can I deduce from this? Now, my monthly payment is 10,251 crowns. Now, I know the location. It's close to Vinohrady, right? Vinohrady, it's a very good area in Prague, and it's just on the bottom of it. It's not too far. It's not Vinohrady per se. It's very close to Vinohrady. So I know that if you're in this location, the apartment looks very good. It's been renovated, so it's not old. And it has 2 rooms, one of which has a kitchen as well, and it's 42 square meters. Now, I know for sure that I can rent it to 2 people, or 1 person that wants to live alone, and I can do both. You know why? Because here in Prague, if you want to rent an apartment, usually they ask you, if you want to live alone, they can ask you even about 14,000 crowns for even small rooms in the center for apartments that are not very renovated. But this one is fucking brand new, right? So of course I'm gonna be able to ask 13,000. Now if I ask 13,000, I'm gonna have 3,000 crowns left over on a monthly basis. Or I can rent this to a couple and ask 7,500 crowns each, meaning I'm gonna have 15,000 crowns, and in that case I'm making 5,000 crowns remaining every month, right? This is a very powerful tool because you can immediately calculate your returns, if it is a good investment, if you can afford it, and if it's not too risky, because obviously if from my job I'm making, I don't know, 25, 27, 30,000, then you know that this is my expenses, this is my rent, I still have enough money left over every month that even if the apartment is empty for a couple of months, I'm still able to cover my monthly payments, right? So you can still, it's a safety tool, it's a knowledge tool, you can use it, and it's very, very powerful to know how to do this. You don't have to be scared of asking around. The bank will tell you the interest rate they ask, and then you can make your own calculations, and you can know if it's a good investment or not. And in this way, you will ensure that you will not lose money on the property. So I thank you very much for watching today. I hope you enjoyed my formula and that you will use it for your future properties. And I will see you on the next episode.